Welcome, everyone, to Lynn Kitchen's special episode of Market Sense. I'm so delighted to have a special guest today, that I have been following his work for years. And this gentleman is a hero of mine, and I am so excited to bring Owen Tracy to this podcast today. Now, as you all know, Money Sense is all about different parts of the market, what's going on. And this is an opportunity for you to learn from an expert on really what is going on and how to discern to make better decisions over time. So let me introduce my favorite analyst, Owen Tracy. Owen, thank you for being here today.
Well, thanks for inviting me, Lynn. It's an absolute pleasure to come and speak to your followers, and I think we're going to have a lot of fun talking together.
Absolutely. As I mentioned, everybody, you are rather a highlight in my life. I've been following your work for so many years. Owen Tracy is the owner of Fuller Tracy Money. And the amazing thing about that is that I love the mission that they have. It's called Empowerment Through Knowledge, which is what I love. Fuller Tracy Money is one of the world's most highly regarded research services that covers global strategies and investment trends. And Owen has, of course, you can hear a little bit of an accent. He's here from in the United States from Ireland, but he has been uh, not only teaching, speaking, but creating his broadcasts all over the world. And he covers major markets around the world: stocks, bonds, currencies, and commodities, both from a technical, behavioral, and fundamental economic perspective. That's what I love. And I do believe that his technical approach as well to market timing, which I think is the best out there, is both behavioral and factual, with a lot of emphasis on market sentiment as well as the price dynamics. So it's kind of a combination of a study of market history, plus liquidity, plus cycles, which you know I'm all about, as well as fiscal responsibility and investor psychology. So, Owen, I hope that I've done you a little bit of service by introducing you that way. I know that you've spoken all over the world to CFA institutes, market technicians. I don't know how you said yes to being on my show today, but I am just so thrilled to have you. Welcome
Well,
again.
I hope you're not overselling me, but we'll see how we get on here. It's certainly a good time to talk about markets, and there's a
Yes, it
lot of
is.
competing trends out there. So I think we've got a lot of ground to cover.
Now, before we change topics, I wanted to let everyone know that Owen is also an author of a best selling book that I want to recommend to everybody. It's called Crowd Money and the Practical Guide to Macro Behavioral Technical Analysis. Crowd Money is one of the best books if you want to know how to begin in technical analysis, not only on individual stocks, bonds, trends, but industry groups, as well as commodities, currencies, and so forth. This is probably the very best primer book that you can purchase. It's available on Amazon, and I've not only studied it throughout the years, but I continue to go back to it, Owen. So thank you for being the author of this book and bringing it out, because let's just start with the idea of this thing called crowd and the behavior behind how everything goes in such fast directions. And we have had a fast market, correct? Would you be willing to just talk a little bit about first how this book came about and how it continues to apply to the markets today?
Well, I took over the chart seminar from David Fuller in 2008, and what I really needed to do was to uh, figure out myself how things were going to work. And my way of thinking is writing. I know what I think by writing it down. So that's really where the book came from. I needed to write out everything I wanted to say in order to get it right in my head. But what it also means when you think about it, you've got crowds and you've got money. And that's the basis of the entire market. You can't have price action without a lot of people involved. You can't have a big move in prices without a lot of money involved. So you add crowds, you add money together, then what you're going to have are price trends. Then you have to monitor those trends. And how do you monitor the trends? Well, that's what the book is about. So it's monitoring the crowd, it's monitoring the money, and it's monitoring the trend.
Well, you mentioned Money, Fuller Tracy Money, and I just want to say that in my classes, I have been using your um, chart service. This is Fuller Tracy Money Global Strategy Service that is available to all of your subscribers, and it gives daily chart action, not only the different kinds of charts like candlestick charts, bar charts, line charts, but also my favorite, point and figure charts, which is not so prevalent in today's world. And it gives us an opportunity to see these price actions, as you mentioned, from the crowd and right in one picture. So I'm a picture person, and I know that you must be too, Owen. And what I put up here on the board is a chart, today's chart of the price of gold. And so here is the price of gold, which, as you know, hit a new high, I believe, yesterday of 3,500, and has boomed up in just a few months from 3,000 per ounce up to 3,500 per ounce. And I was wondering if you wouldn't mind saying, and of course, here's the 200-day moving average, and the 1,000-day moving average is way below that. And that trend has just gone up so fast. Do you have any words that you would like to just talk about what's going on?
Well, something that I think is interesting is usually when you have a price trend like this, it would be stopping at round numbers. You'd get a consolidation around 3,000, you'd get a consolidation around 3,500. Well, it hit 3,500 yesterday, but it didn't stop at 3,000 at all. I mean, it just cruised through it. So it wasn't that we were seeing a lot of retail investors until quite recently. I think a lot of the action in gold has really been central banks. And the primary reason I can say that is because silver hasn't really paid attention to what's been happening in gold. And if this was really a market that was driven by retail investors, silver would be a lot more active. So we've had an acceleration in the price, and that's been particularly true over the last maybe 2 to 3 weeks, where it just went straight from 3,000 to 3,500. That's an acceleration. Well,
Yes.
an acceleration is a trend-ending signal, because what it's telling us is that there is a massive rush on to get as much of this thing into your hands as possible. So that tells us that we have a peak of short-term significance. Now, it's a trend-ending signal, but it's of undetermined duration. So that's the difficulty of looking at an acceleration. It doesn't tell you whether this is the end or an ending. I think what we're probably looking at right now is a pause for gold. And so far, it's down about $175 from that $3,500 peak. So I think that's about an equal sized reaction. And when we talk about equal sized reactions, you got to think about it. A lot of people want to buy the dip. Everybody in a bull market, they really wish they could buy last week's price. So they want to buy the dip. But then you have to ask yourself, well, if you're going to buy the dip, how much of a dip do you wait for? Well, you have to look at how much did it dip before. Well, if it dipped by about $200 before, then you've got to think that there are going to be bids under the market around a $200 reaction. So if gold pulls back by about $200 and starts to bounce, we know that that's exactly what's going on. That there's plenty of people wanted to buy the price from about a week ago, and they're getting that opportunity, so they're coming back in. Now, of course, why did the price go up in an acceleration over the last couple of weeks? I think a lot of it has to do with what's going on in the political sphere. And
Absolutely.
gold is being used as, on the one hand, as an anti-dollar. The dollar had a big decline, so gold was favored as a result of that. But then you have all of this rhetoric that's going on, which is raising questions about the integrity of institutions, whether the chairman of the Federal Reserve is still going to have a job, or his term ends in a year.
That's right.
So there's no and something that I don't see a lot of commentary on is that the median term for a Fed governor is about 8 years, and he's had the job for 8 years. So it's not at all unusual to start talking about replacing him. But of course, the market doesn't want to hear that, and the market is thinking, oh, this could be a really big deal. So they're looking for a hedge, and I think gold was the preferred hedge against political disruption or fundamental kind of technical disruption to the government. So when you see easing stress, gold goes down. When you have intensifying stress, gold goes up. And then, of course, you have the entire question around tariffs and what's going to happen to governments that have their money in US dollars. Because what happened with Russia was they invaded Ukraine, and then the SWIFT financial network was cut off, and they weren't allowed to get their financial reserves back. And now Europe is talking about taking those reserves and using them to rebuild Ukraine. So that means Russia wouldn't get their money back at all.
Right.
And if you're another country and you're sitting out there and you're looking at what happened to Russia, well, you're thinking, golly, I hope that doesn't happen to me. Well, then you don't want to have your reserves in dollars. You want to have your reserves in something physical that you can hold at home. Well, that's gold. Gold is that reserve.
Is that why you call it an anti-dollar?
Yes.
Okay. When we speak about anything like an anti-dollar, it definitely makes one think about the dollar and what's going on with the dollar. And I know that in your service, because I'm a subscriber to your service, Owen, you very much feel that the dollar has had or is in a topping process. And it may be that we're in for a decline of the dollar relative to other currencies for a period of upcoming years. I've heard you speak about that based upon your long-term knowledge of these political events as well as the crowd theory. And could you talk a little bit about what you're seeing now in terms of the dollar? I know we've had some very fast movements of the dollar, the currencies lately as well.
I think one of the biggest things to remember about currencies is that they're quoted out to 4 decimal points. So when we see a big move in currencies, then when you look at the long term, what looks like a big move on an intraday basis is really not all that large. The thing about the dollar index, which is, I think, the most common way of measuring the dollar, it has tended to have big bull and bear market trends that last about 7 years each. And there were big moves on the upside for about 7 years straight down. But the interesting thing is that usually after the decline, there's a bit of messing around. So it goes sideways for a couple of years before the next trend starts. And then it went up and down for 7 years again. But this particular instance has been different because the bull trend in the US dollar was between 2011 and 2022. So that's a very long trend, a bull trend for the US dollar.
Yes, it is.
And it peaked 2 years ago. So we're into nearly 3 years now of the dollar being trading below the peak put in 2022. And this is, I think one of the more important points is that between about 2011 and 2022, it did not matter what you bought in the USA, you made money. If you bought the stock market, if you bought bonds, and you bought property, you could not help but make money. If you were invested, you made money. So that ended in 2022. Now, the property market is still pretty stable, and the stock market had a big hiccup in 2022, and then AI arrived, so it had a big rebound, but it has been definitely more difficult to make money in the stock market. But then the bond market has had a crushing bear market over the last 3 years. So
yes,
it is now a lot more difficult to make money in the US market that the dollar has turned over. So if this is a new bear trend in the US dollar, we have to assume that it's going to be more difficult to make money in the markets for a US investor.
In any market,
No, just the
potentially?
US market.
Okay.
And of course, it's also going to be more difficult for foreign investors to make money in the US market. So,
Or in any United States dollar denominated asset.
yes,
Okay.
unless you're a borrower.
Oh,
If you're a borrower and you're foreign, then you borrow dollars and then you don't have to pay back as many dollars because the dollar has gone down over that holding period.
all
So,
right.
in periods when the dollar goes down, then ex-US assets, that means everything outside the USA, does better simply because the currency is going down. But then borrowers in US dollars make out like bandits because they don't have to pay back as much money as they borrowed when those bonds mature or when those loans mature. So then they get free funding. So a US dollar bear market is actually a massive liquidity fueled event for the rest of the world.
Including emerging markets? Would you add
Particularly,
emerging
I
markets?
would say,
Particularly.
particularly emerging markets.
Well, that's interesting because everyone has been quite panicked recently about these, the relative tariff impact. And it's interesting to see that you you're seeing you have often mentioned that there's always a bull trend somewhere in the world.
Yep,
That monies will go somewhere. Money is fungible, right? So it's going to go to an asset that is of relative value. And so what I'm hearing you say is that in this kind of a shift, there's a tectonic plate shift or movement in a different direction, but it's one that you can see. It's one that makes logical sense.
absolutely.
Am I right?
Yes, absolutely. So you think about the trends in emerging markets have gone nowhere for about 15 years.
Right.
And China is a massive component of the emerging markets. But there's an awful lot of people living in places that are not China and that are not Europe or North America. So we have major markets like India and Indonesia that are uh, very well positioned to benefit from stress between the USA and China. And we're going to see tariff negotiations, but agreements between countries like those and the USA are going to be a lot easier because it's in the USA's interests to get lots of different countries on side, to provide them with favorable trade terms in return for favorable trade terms, but then to build upon that. So that is going to create bull trends. And if the dollar is going down in that environment, well, then those countries are going to be in a very strong position because then their currencies are appreciating. They're getting a lower cost of dollar funding, and then they have the growth to go with it.
That's fascinating, Owen. In that scenario, those of us who have been in America, primarily in dollar denominated assets, um, is it time to lighten up?
I would say that in the event that the markets are now rallying, we've had a 20% pullback on the stock market.
That's right.
Generally speaking, that is a buying opportunity. Now, the dollar is stable around the 100 area. The dollar index has pulled back and it is very oversold. So selling today is not a great idea. But selling into a rally, lightening up into rallies is, I think, a strong position if the dollar is going to roll over.
Yeah.
Or you need to be a much stronger stock picker
Correct.
because
Or trader, because of
more
the
of a trader.
potential trending, which is, as I have been mentioning to everybody, the potential of a sideways motion going up, down, like a sawtooth. But that is your definition of trending sideways, which is great for traders if one has the stomach for that and the risk
Well,
tolerance.
well, the risk tolerance, but I think what a
Yeah.
lot of investors are thinking about is their taxes.
Yes,
So,
that's right.
this is always going to be an issue. And this question comes up after big bull markets every single time,
Yes.
because you have people that have been invested in technology, that have been invested in companies like Apple and Amazon and Google for a decade, and they have massive capital gains. So the decision to sell is not an easy one. And it's not even about whether there is a top formation, or whether there is a risk of downside, or just ranging and just going nowhere for several years. But selling into that is very difficult, because then you've got this big capital gain that you just don't want to
Yes,
pay the
you're right.
taxes on.
Certainly, if it's in a taxable account, not so much if it's in an IRA or 401k account. A little bit more flexibility there. Um, Here's a chart of the Standard & Poor's 500. This is just a 1-year chart. Let me pull up a 5-year chart here so that everyone can see. And this is a bar chart with the 200-day moving average, which we have, as you mentioned in your daily commentary, Owen, that we have broken through the 200-day moving average, something that you speak to a lot. And we're close to, have not actually come down to the 1,000-day moving average, but we're a kiss away, or at least we almost got there, and starting to build a little bit of a base. This is on a bar chart. Quick question: when you do your study, do you look at all the different kinds of chart, like candlestick, bar, and point and figure, just to see different perspectives?
I guess my go-to is the candle chart.
It
And
is.
then I would go, if I want just longer term perspective, I'm going to look at the point and figure chart, just to
Point and
see if
figure
there's
chart.
still,
Me too.
if there's still consistency there. I think because it takes out the noise.
So this is a point and figure chart, everyone, of the Standard & Poor's 500. The same chart, but as Owen just said, it takes out the noise. It compresses the price into just a price action. The blue X is going up, the red O is coming down. But this is only a 5-year chart, Owen, and we can see when we had that aggressive upward trend here. When I went a little bit with more back history, if you don't mind, I was looking at the 20-year chart.
Hmm.
The 20-year point and figure chart might take a moment to update here. Um,
I think
it
you've
does
got it
not.
there.
Is that the
It's
20-year?
just gone up a lot, yeah.
Yeah, but we definitely can see three major trends here, and the last movement up was just 2 years. 2 years
That's
relative
right.
to a 20-year move here. It absolutely had to, it was stretched so high. In the way you teach this, when you have that kind of a fast movement up, there's going to be, you called it not a breakout, but what was the word that you called a fast movement up?
An acceleration.
Acceleration.
Yep.
And you mentioned that an acceleration will need to come back to test or come to the mean, a little bit more to the mean, which it appears to have been in the process of doing here
Absolutely.
for the Standard & Poor's 500. But you said something fascinating that I want to underscore for everyone who's listening. You said that an acceleration was a potential future movement. You didn't know what kind of movement, whether it would come back down or range to the side, but it was a shift in direction. Could you talk a little bit about what we see? Because most of the charts that we look at, whether it's NVIDIA, Tesla, some of these major companies, or even some of the industry groups like almost all industry groups, especially technology, have been parabolic in nature, going up so fast
Yeah.
that you call it an acceleration trend. And we're moving back down a little bit, but what is that we're seeing now? Could you speak to that?
We're at this interesting juncture right now,
Yeah,
because 1,000-day moving average is essentially a 5-year moving average.
that's right.
So So generally speaking, in a big bull trend, which is what we've had, we were in a big bull market that began really in 2009 and broke out in 2011. It's a big bull market. And occasionally, about once every 3 or 4 years, it comes back and tests that 5-year moving average. So that's what it's just done, right? So that's a really big move.
Yeah.
We've had a 20% pullback, and historically, a 20% pullback is a buying opportunity, right?
That's usually true.
Right. So now we have to make a determination. Is this the end, or is this a buying opportunity? And
Right.
so is this an ending or the ending?
An
Well,
ending or the ending.
that's right. So if it's not the ending, we need a couple of things to happen. We need a new source of liquidity.
Aha.
Right? So we need to see the Federal Reserve cutting interest rates. We need to see quantitative easing starting up again. We need a new big fiscal stimulus. All right? You need a lot of money to support valuations at trillions of dollars.
And we have had in the past all that money coming from overseas and other relative currencies into the dollar, right? And that's what you've been mentioning, the liquidity we have had that has underscored and undergirded the last 12-year bull market.
So it's that. So it's the foreign money, but we haven't been shy about printing money here either.
Oh, that's it. That's right. Let's not forget. Let's not forget.
Let's not forget the $2 trillion deficits we've been running for the last 3 or 4 years.
You're
That's
right.
that's a lot of money.
That's
That's a
right.
lot of money that's been
Especially
pouring into
since
these
COVID.
markets. Yeah. So there's been this massive liquidity fuel just pouring into the market. Now, if that foreign investment is pulling back, well, then that's siphoning liquidity out of the market.
Yep.
So then we have to come up with a new source of liquidity. There has to be a new source of liquidity. Now, the way that I kind of think about it is that capital is global and mobile. So it doesn't have to be created here, but it will find its way to the most attractive assets. Now, the AI trend is a big, flashy, exciting trend. So that has been the most attractive asset to be in, and that created huge accelerations in some of these related shares. And there's still a
Especially
lot of
into the
interest in them.
United States, right?
Absolutely.
Okay.
So now the question is, well, how often do you use AI?
I use it a lot more than I did 1 year ago.
Sure.
And, so it is a learning curve. It's a learning trend. And most, I think, corporations, of course, we're seeing, are using it as a complete productivity tool that will change the way we all live. Five years from now, I think, is my philosophy. We won't really recognize our lives 5 years from now, based upon an awful lot of things that are being produced or in production right now as it relates to AI as an augmenting tool. And I've heard you speak about that. And I've also heard you speak about AI being that liquidity barometer that we've been spoiled by in the last several years. And you've often asked the question, is that going to continue, or is that really a source of new liquidity? And I think that's what you're talking about now.
So what I
Right?
think is that I really feel like this is kind of like the internet in 1995 through 1997.
Oh boy, I've been there.
I remember, the dial-up internet. I remember when we got our first Pentium computer,
Yes.
and I'm being super excited about it. And then the cable companies figured out that they could put a lot more bandwidth through the networks. At the same time that all those companies were competing with one another to take each other out. So we had this huge amount of money that was flowing into M&A activity. There was all of this money that was flowing into trying to capture market share. And then we got to 2000, and all of that infrastructure had been built already. and all of those companies crashed. But
That's
the
right.
internet was born,
That's
and
right.
we
The
all
dot
benefited
com
from it.
crash.
And the companies that benefited the most were not the infrastructure companies, they were the services companies. So when we think about where we are with AI right now, the big beneficiaries of this trend over the last couple of years have been the infrastructure companies. It's Nvidia, they're
Right.
selling chips. It's Microsoft, it's Amazon, it's Google, they're building the data centers. And then you have the government getting involved. And I always get suspicious when I hear that the government wants to build the biggest and the best of anything, because that usually tells you that it's already pretty late when you have the government coming out and saying they're going to spend 500 billion on building the biggest and best data center. That's like building the tallest skyscraper. It
True.
really is. I think kind of a topping signal for infrastructure development.
Okay.
I'm seeing a lot more talk right now about fractal computing
Yes.
and that DeepSeek innovation in China, where they were able to do it a lot cheaper with a lot less processing power. That
And
is
faster. Mm,
wonderful news if you're a user. It's terrible news if you're trying to sell infrastructure.
that's right.
So I think a lot of what's happened with NVIDIA and ASML. ASML is the company that's producing the big machines for making the chips. That share has halved, and they
Yeah.
have a 6-7 year order book for new machines, and the share has halved. So the growth is not coming through there. I think we're seeing a massive transition right now out of infrastructure and into services. I think it is the AI services companies are the ones that are going to benefit the most over the next decade. But the
Love that.
infrastructure companies are the ones that have the $1 trillion valuations.
Yeah, that's right. And they are going to, or as you mentioned, those valuations and the rules of the game of valuing those companies collapse very quickly when that value equation changes and shifts by means of that accelerated new progress. And what is really interesting is the speed at which the price reflects that, and almost deflationary. Um, it's like deflationary trends now moving into view, um, allowing, as you mentioned, a brand new possibility or a new industry group to begin to grow or shine as a result. And isn't that just rotational? Isn't that normal rotational happenstance inside of shifting markets such as we have now?
Well, it is, and we one thing we have not had for quite a while is technological deflation.
Yeah,
We were kind of grew accustomed to getting a new chip that was twice as good for half the price for a long time, and that kind of ended about 5 or 6 years ago. And then the technology companies, they invented subscription business models. So you don't buy your Microsoft software anymore, you have to pay for a subscription every year,
yeah,
and then they raise the price on you every year. But that meant that you don't get the technological deflation. Now, I think that if we are at the end of the big data center build and there isn't going to be the need for quite the same number of data centers, well, then you don't need the same amount of power either. So,
mm,
one of the other issues in the US economy is that the price of electricity has been trending higher for the
yeah,
last maybe 5 or 6 years. And a lot of that has been because of data centers. So then if we don't need as many data centers and we have built a lot more energy production capacity, well, then electricity prices start coming down. And that is deflationary. That is something that takes prices for your regular consumer down, but particularly for your business community. Then you get the added productivity boost from AI. And I think that is coming,
right.
particularly for your regular office worker who has rote work to perform. Then they can use AI to do that. I think that what I'm seeing is a lot of people now, they're using AI to transcribe meetings. So, I was talking with a mortgage broker friend of mine yesterday, and he had somebody coming back on him saying he hadn't followed up in the right way. And he was able to go to his AI transcript and say, yes, I did call, and this is what I said, and you cannot come back on me on this. And that is exactly the kind of AI benefits that you're going to get in lots of different jobs. Now, I'm not going to ask AI to do math, and I'm not going to ask it for an objective yes no answer, because they are kind of trained to tell me what I want to hear. But to transcribe things, to fill in forms, those are the kinds of things that take time for people to do and AI can do very quickly. That is, I think, where the use cases are going to start to pop up.
Well, I love that. And you have been so generous with all of your information here today, and your wisdom and understanding of the markets, how they click together, piece together, and move together. I want to thank you. This is an important opportunity for everyone following us to jump in as a subscriber, please, to Owen Tracy's daily subscription service. I've been a member of his subscription service for years and years and years. And when I had was managing my own investment advisory ship, we made sure that his subscription product was the number one thing that we purchased before we purchased anything else. It was always the Fuller Tracy Money program that gave us a great deal of insight and understanding, not just of the United States markets, but worldwide currencies, commodities, and so forth. So, Owen, could you tell everyone how one could become a subscriber of yours? And I know that you do this daily. They will receive a daily, not only email, but chart service so that they can see, hear, and discern everything that you're seeing. How can one become a subscriber?
Well, I moved everything onto Substack a couple of
Yes.
years ago. So you can go to Substack, you type in my name, Owen Tracy, or Fuller Tracy Money, and you can sign up for a free daily email. And there's different subscription options for how much interaction you want to have. But I produce daily written, video, and audio commentary.
And it's wonderful. And I love it. I listen to you every day to make sure that I know what to expect on the next market day. And then you also have an extraordinary weekend commentary, which is an hour long usually, that you go over all of the major asset classes around the world. Could you speak a little bit about your international scope, Owen?
Well, again, what we really want to look at is, that there's going to be a bull market somewhere. But if you want to find it, you have to be looking everywhere.
Ah,
And that is what we're always going to be thinking about, is that there are big markets out there, that the markets are man-made resources, and the rewards are there for us to harvest when the timing is right. So we're looking for the big trends where they're beginning, because we need to identify the beginning of the trend, so that we can play a trend following strategy. We can really benefit from the long term that is available to us. And there are going to be big secular trends evolving. And again, when you have big movements in currencies, it creates trends in other markets. When you have big technological trends, it creates huge bull markets. When you have healthcare trends, it creates these huge markets.
right.
So, and then of course, when you have commodity trends, then those can move exceptionally quickly. And they all feed off one another. And they all compete for the investment flow. And everybody is chasing the same rewards internationally. So when a trend evolves, it's a self-feeding funnel for money to flow into. And that's really what we're looking at trying to identify.
I love that. And if one can identify that early enough, then there's profit to be had and there's wealth to be created. And we all want that so that we can have happy, healthy, wonderful lives, fund all the projects that we hold dear to our in our lives, and have the impact that we wish to have in the world. And that's why I know that Owen is a proponent of wealth creation, wealth building. And I just really want to thank you. I do know also, I want to mention before we close here, Owen, that you teach 2-day seminars every year, or at least, I think it's every year. You can speak to that. This one is coming up in London, 2-day seminar in which that you call it your chart service training. And that's in August, I believe it is. Could you tell everybody about that? And we will put the information in the show notes to make sure that if anybody listening would love to be a part of that, I'm sure there's still some seats available.
Well, the chart seminar was really started by David Fuller back in
Yes.
1969. So,
The chart seminar. Go ahead.
and it's been going every year since then. So, I think it's the longest running seminar on the behavioral approach to markets in the world. I would say too that we've been doing a podcast since 2003, so that's also the longest running financial market podcast in the world.
Congratulations.
So we've been doing these things a long time.
Yeah.
What we're really thinking about in the chart seminar is just spending time to really learn what it is moving the market, where the crowd is active, using the crowd and crowd psychology to read the price and the trend and the consistency, and then using that to come up with an idea about where trends are likely to evolve, whether they are actually happening, and how best to play that.
Now, to me, that's music to my ears. I would suggest anyone who loves that to please get in touch with Owen Tracy. Is there a website, or would they just go to your Substack and
They can find it all there.
ask?
Yep, it's
It's all there.
all on my Substack.
It's
Absolutely.
all in your Substack. Okay. So go to Owen Tracy at Substack, and I will make sure that all of that is here in the show notes for everybody. Because if you can take 2 days to learn how to build wealth internationally, wouldn't that be worth it? 2 days out of one's life to learn something that you'll have as a lifetime learning opportunity. And what, again, as I mentioned at the very beginning, Owen stands for knowledge, education, knowledge through education. And this is something that is near and dear to my heart. So I'm so excited and happy and grateful, Owen, that you took the time to stop by and give us some of your insights. Is there anything else that you would like to say before we close here to everyone who's listening?
Well, I'd just like to say thank you for having me here, and it's really a pleasure to talk to new people and build relationships, because it's empowerment through knowledge, but we always refer to our subscribers as the collective, and that was really not a communist thing, but it's going back and thinking about the Borg from Star Trek, because it's a communal mind, and we share ideas. And it's through the sharing of ideas, and we empower each other through sharing our knowledge. That's really what the service is about.
I agree. Empowerment through knowledge. Thank you so much, Owen Tracy. And so join us next time on Market Sense, when we'll bring you more ideas that you can use in your daily investment life so that we can all build wealth together. Thanks, everyone. Bye for now.